Welcome to SIRA MCQ YouTube channel. Today we discuss advanced level A-level accounting paper 2025 question number 44. This is related to LK 16 property, plant and equipment. Look here, there is a theory part related. Firstly, what are the requirements? Look here, there are so many statements there. Complete the following statements as per LK 16 property, plant and equipment. Okay, look here, first one. Depreciation is systematic allocation of the blank of an asset over its useful lifetime. Depreciation is there's a systematic allocation of blank. What is this? Systematic allocation of the blank of an asset over its useful lifetime. There is a systematic allocation. Which systematic allocation? What is this? There is a systematic allocation of this word of an asset over the useful lifetime. You know what is the equation to annual depreciation? Annual depreciation calculation. Annual depreciation you calculate this way: cost minus residual value divided in useful lifetime. There is a systematic allocation. Look here, the dividing useful lifetime. No, this is the allocation. Okay, what is this? This is the amount cost minus residual value. What is the one word? We can use one word. What is that? Depreciable value. Do you know we purchase a car for, look here, 1 million or 10 million. Okay, after that there is a cost mean like expense. No, at that time there's a huge cost to us. There is a car. At that time the residual value meaning is we can sell it after the useful lifetime to 1 million. Therefore the huge cost is 10 million and we can sell it 1 million at the end of the useful lifetime. After that you can think about that the net effect is 9 million. Why? The 10 million cost is incurred currently, but 1 million is recovered after the useful lifetime. Therefore the net cost is 9 million. The net cost is total cost first, total expense, like. Therefore this 9 million should be dividing in useful lifetime. There is a 9 million is there. 9 million is a huge cost. Therefore we dividing in through the useful lifetime. There is the dividing in 10. Okay, 0.9. There is a 1 year 0.9 expense. There is small depreciation. There is a huge cost of 9 million depreciable value. The total one dividing in useful lifetime. Therefore there is a small depreciation we can identify. This is the depreciation. What is the depreciation? Depreciation means the huge cost dividing through the useful lifetime. Therefore in 1 year we can identify small depreciation expense. The huge expense dividing in useful lifetime, we can small depreciation. What is the amount of systematic allocation? This amount, the 9 million, is a total huge cost. This is cost, no depreciable value. We cannot divide in cost. Why? Residual value. We can earn something after the residual value. Therefore this is the income, this is the cost, the net effect is depreciable value. Therefore we can right? Depreciable value is this one. Depreciation is systematic allocation of which amount? Depreciable value. Depreciable value of asset over its useful lifetime. Okay, look here. Second one. A depreciation of the asset should be commenced. Depreciation of the asset. Okay, depreciation. Commence means starting when it is which time? It is ready for use, available for use. The word is available for use. I explained that the ready for use. Look here, this example. I purchased a motorbike. This is the old version bike on 1st April 2025. But I cannot depreciate it. Why? The depreciation expense. No, at the depreciation identification, the depreciation should be support to income generating purpose. Look here, if there are any expense, you identify it must be support to income generating unit, income generating purpose, generating. If there I purchase a bike for delivery purpose, it should be used for look here, use for income generating unit. Is support to income generating, you can identify the expense. It's support to income generate. Support means use to income generate, you can identify the expense. Okay, support to income generating. Okay, after that you can identify the expense. This is the old version. I cannot write this. Why? There is no usable condition. Why? There is no insurance, no book for it. Therefore, legally purpose I create this. There is a huge cost to usable condition. Therefore, I incurred some cost. After that, I prepared this one. The 1st of 7th 2025 in best usable condition. This is ready for use. Ready for use. And that time you can think about that this is ready, you can write it. This is ready for use. Ready for use means ready to income generating unit. At that point you can identify the depreciation starting date as 1st 7th 2025. Another one. This is usable condition. Use condition. Look here, this is a ready for use, but you actually use this bike in 1st August 2025. What is the depreciation date? This is the purchasing date. This is the purchase date. We cannot buy. This is not ready for use, but this is full insurance quality. Okay, we can write it ready for use. The another date, actually I write it this date. What is the depreciation starting date? Is this date. Ready for use, available for use. This is the depreciation commencing date. Ready for use, available for use, not actual use in date, not purchasing date. Ready for use, available for use in date is depreciation starting point. Okay, look here, this is available for use in date. I filled it. Next one, look here, the useful lifetime and blank of an asset should be reviewed. Reviewed means there is some change or there is some stable amount of this at least at each financial year end. The useful lifetime blank of an asset should be reviewed. Reviewed must be revalued at least each financial year. Useful lifetime and we can think residual value. Okay, residual value. Residual value. This is the all estimations. Useful lifetime is estimation. Residual value is estimated. Okay, let's see. The depreciation expense for the period should be recognized in profit or loss unless it is included in the blank of another asset. Look here, depreciation expense for the period. You know, depreciation expense debit, cumulated depreciation credit. Okay, expense for the period should be recognized profit or loss. You know, administration expense or distribution expense, unless it is included in the another asset. Look here, there's a depreciation expense. No, depreciation expense double entry means depreciation expense debit, depreciation expense debit, cumulated depreciation expense credit. This is the major point. Expense should be identified P&L. P&L means this is distribution expense or distribution expense or administration expense. Administration expense. This is the normal path, normal destination. The depreciation expense used for administration purpose. Look here, there is a computer used for administration purpose. There is a lorry used for distribution purpose. After that, there is another usage for asset. Look here, there is a concrete mixturing machine. The concrete mixturing machine is there. There's concrete machine mixturing depreciation. Sometimes we can identify administration, or sometimes this concrete mixturing machine used to create another asset. Look here, we create using this mixturing machine, we create a building. For our usage. Okay, at this time, this concrete machine depreciation annually we can include to cost of this building. Why? Building. To generate this new building, the concrete machine is depreciation. Why? You can think this is new one. No, this is you. Your father is there. Your father create you for the purpose of some workings. At that point, the father is depreciated to generate you. Therefore, the father's depreciation, father's blood include to you the cost of the building. Therefore, this is the P&L is the daily process. This is a concrete machine used for daily purpose. This is distribution, no administration. But this concrete machine used for another asset generating unit. In that point, this expense debit to cost of the building. Okay, therefore at that point we can identify these depreciation expense as a cost of the another asset. Okay, look here, the depreciation expense for the period should be recognized profit or loss. Normally unless it is included in the cost of another asset, cost or carrying value of another asset. This is the cost is the best word to identify. Okay, this is the end of the question. After that this is a ratio question. Okay, in next video we meet question number 45.